Howdy, how we doing out there? Doc Severson with you here. Trade School for the 13th of December. Wow, we're almost into 2019. Hard to believe. How's everybody doing out there? Hello, hello. If you can hear me, if you can see me, go ahead and wave in the comments in the room. Let me know that you guys have a pulse, that everything's working out there. Hello, there is Red CU. So... see if anybody else is out there. Hello, Red. Good to see you guys. Okay, so trade school today. What are we going to go over today? Today is a virtual grab bag, a literal cornucopia of topics that have been accumulated over the last, I guess the last couple of days or so. It seems to be, some of them are the same things, others are new. So some I have been holding off on for a little while. Others are new. So don't do anything silly. And today's topics, I'm going to talk about screening in TradingView or TradingView. And I thought we had gone over this before, but I guess in looking back that we hadn't really done this in a trade school. Now, we've done this in classes before. We've gone over how to set up the crypto screener in TradingView in classes before, but not here in the trade school. We're going to talk about building short-term trading setups. Now, what do I mean by short-term trading setups? This could be anything from intraday to a shorter-term swing. Really, it's going to depend on what kind of volatility that you have to work with. So a lot of volatility that I've had to work with or that I'm used to is there day after day after day, regardless of what's happening in the markets. So if I'm trading something like the NASDAQ futures, it's there every day. The S&P 500 futures, it's there every day. It never takes a day off, even though it can get a little bit slower. In crypto, things are a little bit more hit and miss. You'll see certain coins. Let's just focus on Bitcoin for now. Hello, Ann. How you doing out there? So if we just focus on Bitcoin, sometimes Bitcoin moves like crazy, and other times it's just very, very quiet. Lately, it's been somewhat quiet. So this is why we're talking about shorter term setups, because if you zoom in on the short term, you can still see quite a bit of movement. Now, is this going to be something that you're going to get, 1,000% gain on? No, this is where you're just going to scratch away at gains. And then something that seems to be popular all the time is building journaling sheets. So I will go into that a little bit. And what I was thinking that I'll do is, and this may be interesting for you guys, is that we're going to do a little bit of work together on this one. So I'll show you how to kind of build this thing up from the ground up, and I will elicit your input on building the strategy. And then what we'll do is we'll kind of come up with a set of rules, and then we'll turn right around and create a journaling sheet. Okay, I do have a couple of words on all this stuff to begin with before I begin. So number one, I'll show you what I can do with my TradingView account with a current level subscription. So I have a pro account, I think. Pretty sure. It seems to do what I need it to do. There's very few things that I can't do with the current level of subscription that I have. So I don't know what your level of subscription will provide. It seems to change from day to day. It seems like what I thought I was getting with a pro level is not what other people are getting. So I don't want to get in the middle of that. I am not a representative of TradingView. I'm not endorsed to sell their program or anything like that. It just seems to do a very, very good job in crypto. And I think it's a nice charting package overall. So please take responsibility for your own subscription for that. So what I found is that those that are serious about what they do in this space will secure the right resources to get the job done. I'm not telling you that you need to go out and spend megabucks to get professional level tools. You wouldn't believe how much you can spend on this sort of thing. Although what I have seen is over the years, what you get for the money for a retail trader is increasingly much more effective. and this is why markets have gotten so efficient lately, is because the edge of the big boys is not what it used to be. When I say big boys, I'm talking about big institutional funds that can push markets around. It used to be that those funds had every technological edge because they had big iron, they had big IBM mainframes sitting in the data centers. Well, now you can get all of that power just sitting on a PC with your broker client. It's truly amazing what's happened these days. So the playing level's flattened out. Just understand that if you have a scarcity mentality, that will eventually put a self-imposed governor. You guys know what a governor is, right? So your engine can only go so fast, perhaps without you realizing it. So if your whole attitude is, well, I only have this much money, so this is all that I can do, eventually that sort of scarcity mentality will get corrosive. It will eventually end up limiting what you allow yourself to do. Now, I'm not saying to go out and spend every last penny that you have and put yourself into hock just to get the tools. Work your way up to it. Be very systematic about what you do. Don't limit yourself in terms of your potential. So number 2, whenever I do a session on journaling spreadsheets, guys, this is what my email inbox looks like the next day. Hey, could you please share your spreadsheet? Hey, Doc, could you share that spreadsheet? I could not attend just the session. And then I get ones in different languages, basically, which means, hey, could you share your spreadsheet? This person requested to access your spreadsheet. Could you share it, please? Hey, mate, I was chundering in the dunny and I missed it. Could you share your spreadsheet? It's like, the point here is that I want you guys to learn how to do this yourselves. I'm a firm believer, if you just copy something from some dude that's out there, you will not use that tool. You won't use it. You're going to spend half your time like, what is this thing? It's not going to make any sense to you. So it creates no ownership in your subconscious mind, so therefore you won't use it. So what I want to show you instead today is let's build it together. I will not share anything that we build today. I will not share it. Okay. And even though I'm saying this, I know that tomorrow I will get requests from people that said, hey, could you share this, please? So today I'll just show how to start from scratch, set up a journaling spreadsheet from a free Google account. It's called Google Sheets. And anybody that sets up a Gmail account can get one of these. You can set up, it's free. Don't have to spend any money. You can get this. I mean, otherwise I could use Excel. A lot of people are comfortable with Excel, or Apple's got numbers, right? It doesn't really matter what you use. I'm not religious about any certain technologies. All I want you to do is to take ownership for what you're doing. Don't copy it. Don't request to share. Watch this over and over again as many times as you need to until you understand what it is that we're doing here. Okay. And I am not some spreadsheet guru, right? Guys, I'm a total hack. I'm an absolute total spreadsheet hack. Some of you out there will be horrified to say, oh my God, I can't even look away. I have to look away at what he's doing. It's just, I know that it's going to happen out there. Certainly there's people that are watching this right now that are going to be going over what we do today and say, wow, I could do it 10 times better than that. Awesome. Great. That's what I want you to do. I want you to take the spirit of what we're doing here today and improve upon it, right? That's the intended audience for this, is those who are far below that level and just need to get started. So that's the impression I'm getting, is a lot of people just don't know how to run spreadsheets, don't know how to put together a journaling spreadsheet, don't know how to get started. So watch and make it better than mine. Howdy, Alex. Everybody say hello to Alex. All right. So let's get rolling here. How we doing? Okay. So with that in mind, let's tackle the first task that we have today, and let's go into our TradingView account. All right. And so let's tell you what, let's just make it clean. We'll just go to price and volume. So I'm just going up to templates. I've got a template defined for just price and volume, nothing else. So let's go to even a daily chart. Let's make sure we're on a daily chart. Okay. And I'm going to go down here to the lower left-hand corner. And even before I click on this, I'm going to hit the little caret there. And probably if you're new to TradingView, the first thing that you'll see is Stock Screener. It'll come up as Stock Screener. Okay. And if you're in Stock Screener, what you can do is you can come over to here and you can pick the country that you want. See this little thing right here? Let's highlight this right over here. You can pick the country that you want to screen for. So we can even go down here. Oh, Canada. There we go. You got to have fun. Okay, so you can pick whatever country that you want to screen from. So look, you know, TradingView actually will do stocks and just about everything else. Okay, but we don't want to do that in here. We want to go over to crypto. So to go over to the crypto screener, what you're going to do is when you open up this thing, and I'm going to, again, call this out over here, right there is where you want to be clicking. Okay, hit that little caret and go down to crypto screener. All right. Now, the way it comes up, and you can go crazy with this stuff, guys. You can redefine these searches. What you've got is the overall, you've got overview, performance. Notice how performance changes over time. You've got, these are all the predefined ones, right? These are all the predefined ones. So this has got ADX, the oscillators has got ADX, ATR, CCI 20, and MACD, and RSI 14, and all that stuff. And then you got trend following, and trend following cares about moving averages, right? I don't care about any of that stuff. You guys can go nuts with this if you want to. You can create a whole new one if you want to. I'm just going to stick with overview. So the way it comes out of the box is just fine for us. We're going to start with overview. So that's the first thing I want you to set for, is to set this thing on overview. Okay, overview. Now, if you look at this, we've got, and in fact, what I'll do is I'll start off by, I'm going to get rid of the filters. And if I get rid of all the filters, I've got 1,680 matches. I've got, if I search on all this stuff, the number one coin that's moving is called NIO versus the US dollar, or there's CTX versus Bitcoin. And these things are up 127%. Let's see what that chart looks like. Ooh. Well, that hardly looks like it's up 127%, but if you start at nothing and if you rally even a little bit, maybe you can be up 127%. So this is a bunch of crap that's on here, right? So a lot of this stuff is just crap. So just because it's moving 60, 70, 80, 100% doesn't mean that it's worth your investing dollar. So let's do a little bit of filtering. So the first thing that we can do is generally anything that we're looking for is going to be using a reference currency of BTC. So what I'm going to do is, in this box right here, I'm going to type in BTC. And right off the bat, we've gotten rid of 1,000 coins that are using a reference currency of like Ethereum, or maybe Binance Coin, or maybe Litecoin, or some other reference coin, or even the US dollar. The US dollar generally is the bigger ones. So now I've got it down to 592 coins that I'm going to look for. And I can certainly go through here and do, let's see what's up, let's see what's down. I'm just clicking on the change percentage to find this out. So this is where probably most of you want a little bit of help, is the filters. The filters. So I'm going to go into filters, and I'm going to adjust the filters, because even though you've cut out 1,000 coins out of 1,680, you're down to 592. That's still a lot of work to look through this sort of stuff. So let's go into filters. And typically what I'm going to use is I'm going to scroll down here. And I'll tell you what, I'm going to cheat. I'm going to bring up the one that I had from before. All right, so I'm going to add my current screen, which is 200 daily average. And notice how I only have 27 left. Let's see what I did, because I don't want to recreate what I've done here. Oh, actually, this is not the one that I want. I want this one. Okay, so this one's got 37 matches. So let's go through here and figure out what that I've done. I've only actually added 2 things onto this whole thing. Now, if you go down through this, filters, you'll see that there's just a ton of stuff. For those of you that have screened on equities before, a lot of this stuff will look familiar. Hey, I want to see stuff that's below the 100 period moving average or above the 10 period moving average, or showing the Ichimoku cloud in this zone, or below this Keltner channel, or this moving average. So, right, it's just a whole bunch of technical indicators, and you're specifying, make sure that any result comes in either above or below this level. And I'm only adding 2 of them. This is as simple as it gets. First of all, I don't want to look at stuff on exchanges that I can't trade. So I'm going to limit my results to Binance, Bitfinex, Bitstamp, Bittrex, Coinbase, Gemini. Could I add more of them? Certainly I could. It's up to you. You determine what you want to scan against. What point is there in finding coins on exchanges that I can't trade on? None. Just going to tease myself. The other thing is the only technical signal that I'm using to filter here, which is the 200-day moving average. Notice that I'm demanding that the simple moving average is below the last price. So what this means is, if here is the price, here's the price moving up and down and doing all this stuff, the 200-day moving average needs to be below that. This implies a larger time frame uptrend. If the price is above a 200-day moving average, it implies an uptrend. Does it guarantee an uptrend? No, it doesn't. It implies one. Now, some of you might be saying, whoa, that's awfully restrictive. Couldn't you use a smaller moving average and pick up more results? Certainly could. What I often find is that things will take a while. So it takes a while. It takes a pretty good rally for something to actually get above that 200-day average and then start to show on my screener. So sometimes I lose stuff that's off the bottom, but look, we can't chase after everything that's out there. We want to look for something that's showing relative strength. So if we get rid of this, now we'll look and see what we have for today. So we have some pretty reasonable results. We only have 37 matches to look through, and actually not all of these we really care about. We just want to see the ones that are moving. And so this is one that I talked about. I think I talked about this one last night. Blackcoin is starting to lift off after a fairly extensive base. So I can just click that screener here, and you can see that after this base, this thing is moving and grooving on pretty good volume. Okay, so this is one that we want to keep an eye on. Here is waves. So waves is something that we've noticed the last couple of weeks. We got the initial move. It consolidated, pulled back, set up a higher low, and then boom, off she goes again. Now let's do this. Let's look and see whether or not, let's go over to our templates to throw the chop and the Bollingers on here. And let's see whether or not this is something that we could have taken as a trade. Unfortunately, this one is so hot right now that it's not even recharging up to 55 yet before it takes off again. So this is what we do. We hold our hand palm out like this and wave goodbye at it, right? That's what we do. We never chase after these things. We wave goodbye and say, goodbye waves, we'll catch you again some other time. And this is what we need to do. We need to wait for the price to consolidate, maybe flag out, build up the chop index, above 55, and then we can take the next signal if we get that point. Wait for the trade to come to you. Okay. So that's pretty much all I had on the screener. I don't know if the people that are asking the questions on the screener are on the chat today with us, but if there's any other questions, now would be the time to ask before I move on to the next topic. So for those of you that want to participate in the short term, start thinking about what kind of metrics that you want to use for the strategy. So we're going to do this a little bit reverse. We're going to start by defining, I'll show you guys like how we can start to define a short-term strategy. And then we'll actually, after we define that short-term strategy, it's not going to be the be-all and end-all of all short-term strategies, but it will give us something to work off of. Then we'll go back to the journaling spreadsheet and start to build that. Okay? So any questions? I don't see anything. Hello, everybody. There's actually quite a few people on board now. So, and for those of you that are watching this on the replay, hello. And if you have any questions, please shoot them in. support@readysetcrypto.com. All right, I'm just going to take a quick pause here and wait for any other questions to come in, and then we'll move along. All right, so nothing seen. What I'm going to do is let's focus only on Bitcoin. So BTC USD, there we are. And let's wipe the slate clean. Let's go down to price and volume. That's it. That's all we have. How can we trade this on a short-term basis? How can we trade this on a short-term basis? Well, clearly we have range contraction leading to range expansion to range contraction again. It moves like everything else, right? So it's actually trimmed half of its value off in just the last few weeks. Interesting. So let's talk about some of the principles that we want to use for short-term trading. First of all, I think just for the purpose of today, we're going to be coming up with an anchor and a signal. Okay, so for those of you that have not been through the fractal class before, an anchor chart, we're going to trade in the direction of the anchor chart swing. Whatever anchor chart swing that is, whatever time frame that is. We'll talk about time frames here in a minute. And tell you what, if I have to slow down, this will become a 2-hour long session. So you are welcome to replay this as many times as you need to. Okay, that's the whole point of this, is that as soon as I finish, or even before I finish, you can actually rewind this thing and start watching again before I finish this thing. So I have to keep pushing on. Otherwise, this is going to be a very long, very cumbersome session to get through. There's an awful lot that we have to get through today. Okay, so anchor, signal. We want to trade in the direction of the anchor chart swing. The anchor chart trend too, if we can, because that's going to be, as they say, more better. Signal is where we're going to be taking our signals from. So trade in the direction of the anchor chart swing, take our signals off the signal chart. They're going to be different in time frame by either 25 to 1 or 5 to 1. We'll determine that when we get there. No worries. Hey, you know the latest thing? After working with Trader Cobb, I have learned that the Aussies no longer say no worries, mate. It's no dramas. So I'm here as your cultural expert to let you know that the expression is no dramas, mate. Okay, so that's what we're going to be using here. No dramas. All right, so let's do this now. What time frame should we use? Well, first of all, let's go ahead and split up the chart. All right, let's split up the chart. And the way that we're going to do this is right up here in TradingView. TradingView right there. Right there. Okay, that is where we're going to split up this chart, this lovely chart. So we only have a single pane view right now. what we want to do, and we want to make sure that we sync the symbol and sync the crosshair. That's going to be really important. We don't want to sync the interval. We don't want to sync the time. We do want to sync the drawings. So we want to sync the drawings, the crosshair, and the symbol. Now, I've seen this done a lot of ways. When I was talking to Trader Cobb last week, he actually does one on top of the other. So to his brain, that makes sense. One on top of the other, shorter term on top of the longer term chart. I have always been a side-by-side bigot. So I like to have my charts side by side, mate. Okay, so this is what we have here. We have a side-by-side chart, and what we're going to do is both of them are Bitcoin versus the US dollar. And I've just got random time frames up here. Now I don't know if I can or not. I thought I could drag these around and change them, but I don't think I can. Or at least I'm not going to do that right now. So what you'll find is, what we're going to do here is this is going to be our anchor chart over here, and this is going to be our signal chart. Now, what time frame we're going to use, I don't know yet. This is obviously all wrong here. We got a daily chart and a 12-minute chart off to the right. That's just not going to work. Way skewed. So a lot of the answer to this will depend on how volatile the current market is. So let's try doing this. Let's try starting out with something like a 5-hour chart. Okay, so here's a 5-hour chart, and let's go over here and let's change this to a 1-hour chart. So we're going to have a 5 to 1. And quite honestly, I'm not sure that this is going to give us much. As you can see right now, the current market is not showing us much volatility at all. It's just kind of wedging in here. Can you see this? This is the anchor chart. Anchor chart's over here. Signal chart's over here. Okay, and right now I've got a 5 to 1 time ratio. This is our anchor chart. We want to trade in the direction of the anchor chart swing, and I'll tell you what, we have no clue which way the anchor chart swing is right now. It's going sideways. Kind of what I was talking about the other day. So this may be, actually, for today's volatility, this may be a little bit too slow. So for a 5-hour, 1 hour, it may be too slow. Whereas when you're trending like in here, this would be probably perfect for that. Can you see? Here's the trading the direction of the anchor chart swing. Here's where we'd be trading in the, and now we're not getting any swings at all. So this would make more sense if this was over here, right? So we could do something like this. We could trade in the direction of the anchor chart swing, and then simply, and this is also where we need to have that. Do you see where it's helpful to have the crosshairs? So now we could do something like this. So in this volatility, 5 hours to 1 hour would be fine. So what I'm going to do instead is I'm going to change this down to 1 hour and 12 minutes on the right-hand side. So it's still 5 to 1. Still 5 to 1, but now we have a little bit more volatility to, well, we have a little bit more price movement to work with on the charts. Yes? Okay. So now we can see the swing right now on the anchor chart, and this is really poor. This is a very poor swing, guys. This is probably not something that we would want to trade. So let me get that out on the table right now. This is not the volatility that you're looking for. You want to see something that's doing this. This is what you want to see. If you're trading directionally, this is what you want to see. You don't want to see this crap, right? This stuff is just not moving. But let's assume that we have a swing to the downside right now. Everybody with me? Okay. If anybody's confused or doesn't know what's going on, just let me know. Raise your paw and let me know, and I will stop and explain. So right now, what we're trying to do is define what we're going to be using. And so far, I guess what we're saying is here, anchor, signal, and this is going to be a 1 hour, and this is going to be 12 minutes. Do you guys understand that this is a 5-to-1 ratio? 5-to-1 ratio, right? Everybody with me here? I'll pause for a second. So let's do this. And probably this is better off if I had done this before, but let's go ahead and add the chop index to both of these. I'm going to add the chop index to both of these just to give myself, because I like it. I like having a chop index on every chart. And the reason for that is I like having a sense of context for where it is. Right now it's showing that the anchor chart is supercharged right now. This thing's going to come flying out of here. Which direction? If it undercuts 33.52, then we have ourselves a swing, and probably a nice swing. Kind of looks like a bear flag to me right now. All right, so this is all starting to make a little bit more sense because we added some context on here through the chop index. Now, I'm going to ask this question out there, and I realize that the chat is delayed, so it does take quite a few seconds for the video to kind of compress itself and stream through the pipe and get out to you guys out there. I need to put a momentum oscillator on here. Now, what I normally use for something like this is what I call the RSI Laguerre with embedded fractal. It's got a nice long name to it, but I've not been able to find one of these for TradingView yet. So if anybody has a favorite oscillator that you'd like to use, please let me know right now, and I will add this to our strategy. Okay, so we can be flexible here. And if I don't hear anything in the next few seconds, I will probably just go through here and pick one. All right, so what we're going to be doing, again, our rules here for this strategy, and look at this, we're starting to break down from that flag. Look at the volume coming in. We're breaking down, right? So we're almost there. And somebody bought the dip too. Okay, I'm not seeing anything in terms of oscillators, so I'm going to go through here and pick one. How about if we add the awesome oscillator? Now the RSI is really not that good for this type of application. RSI is really more of a momentum thing. It really does not provide very good signals. Okay, so I'm going to add the awesome oscillator to both of these. And this is, gosh, who was the name of this guy? Bill, it's not Bill O'Neill, it's some other Bill. I read his book. His book is called Trading Chaos. So if anybody searches on the name of the book, Trading Chaos, you will find his last name, which somehow escapes me right now. And you can read more about it. Kind of an interesting character. So if you've ever heard of the alligator and the awesome oscillator, he's got this whole system which he's sort of built himself, and he works with his daughter. At least he used to when he wrote the book 10 years ago. All right, so what do we have here for our strategy? We have the chop index in the middle, and that's to give us context. Context gives us a sense of whether something is in exhaustion, range contraction, range expansion, those kind of things. And I don't expect you guys to understand this right on the fly, because this is something that has taken me a long time to figure out and still in the process of mastering it, right? But simply what we want to do is trade in the direction of the anchor chart swing. We have a lot of energy on the anchor chart. So, and the anchor chart is trending to the downside. Okay, so we not only have trend, but we have swing to the downside. So now what I want is for the oscillator to give me a signal on this. And unfortunately, we didn't get a very good signal from this. So I may not be able to use the awesome oscillator, but let's just assume that we could. Typically what I want to see is for an awesome oscillator signal, I want to see something for a short crossover signal here. I want to see something that's on the upper side crossing over. I want to see this transition. I want to see a transition from green to red to take a signal. So all of these would be effective signals right there, right there, right there. So again, we're trading in the direction of the anchor chart swing, looking for a signal. We didn't get one. So this would not be an entry. But this would have been an entry. Let's see. Certainly this would have been an entry right there. Okay. This was an uptrend. So we would have been looking for this one. This would have been an entry right there. Okay. Because we changed polarity right there. Here's a higher low. Here's a signal to go long. Boom right there. So this is what you're fighting over. You're fighting after these little tiny moves here from 33.60 to 34.10. You got a 50-point move in BTC, and that's what you're chasing after, which is not big. So on one Bitcoin, which is costing you 33.60 in capital, you're getting a $50 move. So do the return on something like that. Bill Williams, that's his name. Thank you. I knew it was a Bill somebody. Okay, so that's how we do short-term trading, guys. That's how we do short-term trading. So what you want to do is you want to have an anchor chart, a signal chart. Anchor chart gives you the context and lets you understand in what direction you should be pointing. The fractal energy here, or the choppiness index, gives you an understanding of whether you should expect to see a trend come to a halt or a currently consolidating chart starting to trend. Range contraction in this case leads to range expansion. This is when we snuck up on this thing. It was in range contraction like this. And then what we're doing is we're looking to the oscillator to give us a signal. We're looking to the oscillator to give us a signal. So that's kind of the process that we're using for this. Any questions before I move on to the journaling part of this? Any questions? Everybody totally confused right now. I wouldn't be surprised. This is not easy. This is not red arrows and green arrows. This is not a black box system. This is something where you have to understand contextually what on earth is going on two different time frames. And some of us use more than 2 time frames. We use several time frames to figure out what's going on. We're looking for the move inside the move, inside the move, inside the move. You know, it's almost like opening up that big box on Christmas and saying, oh, there's a smaller box inside here. What's in there? Okay, any questions before I move on? And for those of you that are watching this on the replay, make sure you downvote this video. No, I'm just kidding. For those of you watching on the replay, let me know if there's anything that comes up that you want to hit me with later on. The oscillators look like they don't align. Welcome to fractals, Annie. Welcome to fractals. They will not align. So it's rare. This is what we're trying to do. We're trying to get the momentum in the same direction. So in this case, actually, they do align. They do align because you are seeing the red here and you're seeing the negative momentum on this one. But these are not oscillators. This is the fractal energy. They do not align. Okay, these are totally different. So look at this. This trade actually would have worked out if we had taken this. Unfortunately, we did not get a signal. So our rule would probably be it's going to have to be above the midpoint for us to take a signal. So awesome oscillator is not going to give you a clear signal here, but guess what? Let's say that we added something like, we could use something like, let's see, what's another good one here? How about the Fisher transform? Let's add the Fisher transform. Let's see if that one would have helped. Okay. Fisher transform, depending on where we set the threshold for this, if we say that the threshold has to be above 0, then the Fisher transform actually would have given us a crossover signal on this. TIG, we're looking for, TIG is exactly correct. So right now we're in a primary downtrend. We want to trade the down swings right now. So once we understand that context and the down swings, we come over here to the signal chart and we look for a signal to enter. Okay, how to figure confidence to trade larger trade. You got to earn the right, and you got to earn the right. So you have to start with simulated capital. Simulate your trades to begin with. Simulate. Once you build a system which wins and has a positive profit factor and gives you confidence in it, then you can start with little tiny positions, little itty bitty positions that you don't even notice that you're trading something live. Look at this swing. I mean, this is exactly what we're doing here, guys. Nice bear flag. So we stepped into this thing and it was just a consolidation, but then it quickly became clear that this was the next swing. So this is how you build a strategy, right? Now, it doesn't mean that the awesome oscillator is not going to work for you. It just didn't work in that specific situation. So maybe a Fisher transform would have worked there. Okay, the volume is giving you another indication that something's going on here. You're seeing bigger volume on both time frames. So let's try something else. Let's try another indicator here. And I'm not going to go through the entire bunch. Oh, let's see. What could we have used? Let's try the good old boring stochastic. Let's see. Stochastic. Let's see if the stochastic would have worked here. Yeah, see, this was not very much of a swing. And most strategies that you're going to find, you're going to want to find that crossover to be occurring as high as possible through here. So even stochastic was not all that impressive. This is how you build a system, guys. You work and you put the tools on here until, who said Ichimoku cloud? Come on. You build it until you find something that you're happy with. Let's see, parabolic stop and reverse. No, I'm not going to do that one. Let's get rid of that. Okay, let's try another one. So now we're into exhaustion. I would expect to, that is quite a move there. Pretty sweet. All right, let me try one more, and then I'm going to go over to start to work on the, let's see, what else could we use here? Yeah, I like the Fisher transform, actually. Let's see what the price oscillator is. Nope, that looks awful. Let's not use that. That doesn't tell me anything. This is what you do, guys. Go through until you find something that you like that fits your eye. Let's see, a couple more here. Let's try the ultimate oscillator. Some of these are going to be bounded oscillators. Some of these are going to be unbounded oscillators. So right now, the ultimate oscillator, it did turn over, but this doesn't give me a good sense of, some are going to catch your eye and some are not. Let me just try one more. Ooh, let's see. Some people like the CCI. Price oscillator, we looked at that one. Stochastic RSI, I might come back to that one in a second. Yeah, there's Woody CCI. Let's try the Williams percent R. Yeah, even the Williams is not giving us, this was a fairly weak signal. This is a fairly weak signal. Really, the one that gave us the best signal was the Fisher transform. Actually, the Fisher transform is one of the studies I included in the short-term trading strategies class. I'm pretty sure that was in there. Okay, so let's go back. Let's just assume that we're going to use the awesome oscillator. I did not name that, by the way. Let's assume that we're going to use the awesome oscillator as our study, and let's do some let's do some journaling. Let's build a system. So the way that we're going to do this, I know it's really white, right? It's really blinding, is if you get a Google account, you're going to get what's called Google Drive. Google Drive it's a 30 gigabyte cloud storage, and it includes all kinds of applications here. So what I'm going to do is I'm going to click, and I'm in the upper left-hand corner. I'm going to click New. And I can either pick Google Docs, which is the same thing as Microsoft Word in a way. Google Sheets, Google Slides. Google Slides is the same thing as PowerPoint, but Google Sheets is what we want. I have a new sheet. Please don't ask me to share this with you. We're going to build this. I want to show you how to do this for yourself. Okay, so let's go ahead and give it a name, because it's good to give things a name. And don't call it ABCDE either, if you know what I'm talking about. Okay, so we're just going to call this December 12 Journal. But actually today is the 13th, so let's call this December 13th Journal. There we go. Okay, so here we are. We're starting with a blank spreadsheet. There's nothing on this. Let's go ahead and add a tab. Now I'm going to go down to the bottom of the sheet, and I'm going to hit a plus sign. And the first thing I want to do here is I'm going to right click and rename this, and I'm going to set up the rules. And let's set up our entry rules. So I'm just typing into these little, so we can do things here. We can say, hey, let's expand this cell, and let's stick it in the middle here, and then let's, we can have all kinds of fun with this. We can say, let's make the text color white, and let's bold this out. Okay, so there's our entry rules. So this stuff is just like everything else that you've done in Microsoft. All right, so we want to trade in the direction of the anchor chart swing. Oops. I have to remember not to use any numbers here. Trade in the direction of the anchor chart swing. All right, so yeah, thanks for letting me know that you lost the picture. I've got these hotkeys that are on here. We've got hotkeys on here, and I have to remember not to use any numbers. Okay, second rule is we're going to trade in the direction of the anchor chart swing, trade in the direction of the anchor chart trend, if possible. Yeah, if I hit a 1, 2, or a 3, I'm going to switch to a different screen. If I hit a 1, 2, or 3, it's not going to turn out well. So I had that one session a few weeks back where I couldn't figure out why the screens were flipping around, but you guys helped me through that. We worked together. Okay, so what other rules do we have? If you guys know of any rules that we just came up with, let's work together on these. Okay. Let's make sure the energy on the anchor chart must be greater than, let's say, 45. Anchor chart energy can't be exhausted because I'm not going to expect much of a move at that point, right? Energy on the anchor chart must be greater than 45. So I want to work these rules top down, right? I don't want to just work to the bottom. Okay. What else can we pick on the anchor chart? Trade in the direction of the anchor chart swing. Trade in the direction of the anchor chart trend, if possible. Energy on the anchor chart's got to be above 45. I will say the next one is awesome oscillator. Momentum must be moving in the direction of trade. So in other words, if we wanted to set up a short trade, the anchor chart, the awesome oscillator momentum had to be heading down. We didn't go over that, but that would be one rule that I would add for this. Okay? That will probably do it for the anchor chart. Let's move over to the signal chart. Now, what do we need to see from the signal chart for us to take a trade? So we've already specified, we already know what direction that we want to trade in, don't we? We already know what direction we want to trade in. So in this case, we know that we wanted to trade to the downside because we had the price making a lower high, and if it traded underneath here, it was going to make a lower low, and that energy was expected to come to the downside. So we wanted to see the awesome oscillator on the anchor chart also starting to head to the downside, didn't we? Okay. And we wanted to make sure that there was enough energy on this guy. We wanted to make sure that it wasn't like sitting down here. Like me shorting into this, if I shorted into this, look, it's already come down all this way. Why would I expect it to go any further? It's not. It's exhausted, right? It's sitting there. It's like, I'm exhausted. I can't go any further. So it's almost likely to go back up in the opposite direction. But now in this case, when we looked at this, this was fully charged up. This thing was ready to move. Okay, so everything was looking good for a short trade on this side of things. Okay, so I've got 4 rules here and everything is looking good. So what do I need to do from the signal chart perspective? Let's go back to the chart. What do I need to do from the signal chart perspective? Really, I need to make sure that there's enough energy. It can't be exhausted. And that I need to look for, in this case, we don't want the Williams percent R. Let's go back to, I'll just say the oscillator must cross. So there's 2 rules that we're going to put in on the signal chart. 2 rules that we're going to put in on the signal chart. And then I'll say must be above marker, must be beyond marker. When I say beyond the marker, in this case, like for this guy, for the Fisher transform, it had to be above 0 for us to take a short entry. Or for us to take a long entry, it has to cross below 0 for us to take a long entry. The lower, the better. The higher, the better for shorts. The lower, the better for longs. Okay, so we have our rules. We have all of our rules. Everybody cool? Everybody cool? I suspect a lot of people have no idea what's going on right now. That's okay. That means that there's room for growth. Alex, I think you know where I'm coming from. Okay, so let's go back to our spreadsheet, the first sheet here, and I'm going to right click and change this to journal. I'm going to rename it to journal. And I'm just going to enter in some names of the columns that I'm going to put in here, such as trade number, date, time, long, short. And actually, I'm going to highlight all of these and I'm going to center them. So I've got everything centered here. Okay, have I lost everybody? Everybody's gotten really, really quiet. Okay, so we're just keeping track of stuff by trade number, date, time. I can't put any numbers in here. I can't put any numbers in here because it's going to mess around with things. And actually what I'm going to do is I'm going to insert a couple of rows here. And I'm going to do this a couple of times. And I'll show you why later on. Give myself a little bit of room. Okay, so now what I want to do is I want to put in the rules. And I'm going to format and I'm going to merge these cells just so that I can add some more text into here. Well, the awesome oscillator signal was, the awesome oscillator signal for this one was, we didn't get much of a signal. So this would be, here would be, and again, this is not what I'm recommending, guys. This is just, we just went through here and we just built something on the fly. Here would be a good crossover on the awesome oscillator right there. Here's another good crossover on the awesome oscillator. This was almost what we call a ghost signal. That's a ghost signal. My preference would be is that we have a crossover above the reference line. The reference line is 0. So in this case, even though this was a really nice short signal, the awesome oscillator was not quick enough to be able to pick it up. The Fisher transform actually was the one oscillator that we put on here that is known for being very responsive. So the Fisher transform is one of the fastest oscillators out there. Okay, back to the book. So I'm just going to, I'm going to go through these one at a time. Trade in direction of anchor chart swing. Okay, so clearly I can't just do that. So what I need to do is when I click on this, I have to go back up to format and say, let's do some text wrapping. Trade in the direction of the anchor chart swing. And maybe what I need to do is let's merge 4 of these together. Okay. And I will center that. So we're going to trade in the direction of the anchor chart swing. And you'll see what this is for in a minute. Now let's go to the next rule. So I'm going to go up here to format, merge cells, merge all, trade in direction of anchor trend. And we're going to do text wrapping, and then we'll move that to the middle. Again, see what I'm doing here, guys? Okay, let's go for the next rule. Let's format, merge cells, merge all of these, and let's just go ahead and let's text wrap. And rule number 3 was what? Energy on the anchor chart has got to be above 45. Oops, I seem to have goofed here. There we go. Merge all. Now, sometimes what you can do is just move these over, but I'm doing this one at a time just so that you guys can see what I'm doing. Anchor energy greater than 45. This is how you build these. It's tedious. Yes, it's tedious. Okay, so what's our next rule? What do we have for our next rule down here? Awesome oscillator, or let's just say anchor oscillator momentum. Anchor momentum must be moving in direction of the trade. Anchor momentum Momo is momentum, by the way, in case you want to know. Okay, looks like everybody's good. All right, let's add our next one over here. Let's merge these. Let's do some wrapping. And what's our next rule? The next rule is energy on the signal chart. It's got to be above 45. And then our last rule is what? Oscillator cross in direction to be beyond marker. Okay, let's see how everybody's doing. What I like to do is, these are the entry rules. These are the entry rules for what we're doing. So what I like to do is, let's give them just a little bit of color, and we can highlight them a little bit. All right, so each one of these can have its own. We're going to start to give it a little bit of format, right, so that we can see what's going on. All right, I will. I don't think we're going to have time to do much with this, but I will just say, I will just call this one just an exit rule. Right, because we haven't defined our exit rules yet, have we? And we're not going to have time to do that. But I'll give this one a slightly different color, because what I typically do is I will run these as, so I will set these up as entry rules, and then I will have like 2 or 3 exit rules. Because did I run my stop correctly? Did I get out at the target that I wanted to? All those kind of things. So I'm just going to say exit per plan here for this one. Okay. And a lot of times what I like to do is I like to give these a little bit more pop, right? So I'll merge all of these just to make it look nice. If you guys have any questions, go ahead, and now is a great time to do that while I'm doing this tedious stuff. Okay. And then what I like to do is I like to say, did I win the trade? So is it a win? And this will be a 1 or a 0 that's in here. See what we're doing? And so what we're going to do with these is, what I like to do is I like to set these things up with a fill color, which is all green. Whoa, that's really green, right? Okay. And if there is, I can't put any numbers on here because this will give you a black screen, but if there is something where I made a violation, what I will do is I will put, I'm going to do this briefly here. I will put a 1 down there, and I will change this to a red color. I will flag that and say, uh-oh, you didn't do that one right. And what I want to do is I want to add these things up. So the way that you do that is you highlight that list of row, right? And you'll do something like that, equals sum right parentheses. And notice how it's going to add up everything that's in that column. And that's what you want to do your Pareto analysis. Okay, questions? You guys have questions on what we're doing here? So the important thing is that as you go through your trade numbers, so 1, 2, 3, so I can put, 4, 5, 6, 7, 8. Okay, sound back? Yeah, there we go. Yeah, all the hotkeys are set up on numbers here, so it looks like I put a 0. I think the 0 is the 9 or 0 is the mute on here. Sorry about that. Okay, I should be back on sound. Okay. something like this, what you're going to see is like this is we're going to merge all of these and we'll just say, you know, let's put wrapping on here. Put a result like that. And this is where you need to, yeah, sound should be back. Yeah, anytime I type a number into here, it's going to hit a hotkey and bad things are going to happen. So I apologize in advance for that. Okay, so the result is going to be the result of your trade. And let's say I'm going to do this here. I'm going to normalize this to dollars. And this is where it gets a little tricky because it's very easy for me to normalize things in terms of dollars in your fiat currency. And it may not be that simple to do that as you're finishing out a BTC trade, right? So you're going to have to normalize this in whatever your fiat currency is. And so I'm going to highlight all of these and I'm going to say, I'm going to format this as currency. I'm going to format this row in terms of currency. And so for each one of these, I'm going to let's put in some numbers here that are not going to trigger anything. And let me know if I lose sound or anything like that. Okay. So I'm just coming up with some results here just for grins. And I think I'm still good on sound. And this is what I will do. And this is, you guys, you know, for those of you that know spreadsheets, look away because you're going to be shocked. But I will just do this in a very elementary way because I don't want to sit there and spend time. So I'll just do equals my lack of spreadsheet skills. Oh, Doc, I was horrified to find that you losers. Okay, so here's our losers, here's our winners. Now what our profit factor is I want to divide the winners by the losers. Okay, so this is how we're going to do this, and you guys might want to watch this carefully. Oh, that's my guard dog. Okay, so I'm going to go equals, and divided by, so I'm going to close that parentheses, divided by absolute value. Remember absolute value? Absolute value of factor. Okay, and so there we go. We have a 2.6 profit factor, but we don't want a $2.65 profit factor, so we have to go back up to our format, go to number, and then just pick number like this. A 2.65 profit factor. That is a schnauzer. It's a miniature schnauzer, Archie. So I'll have to show you guys a picture of him sometime. But I think this is important. If you guys know your win percentage, if you know what your winning trades are, this is just gross winners. You can include your commissions in here if you want to. Here's your gross losers. And that is going to give you your profit factor. You want a profit factor as high as possible, somewhere between 1.5 to 2 is sort of where you want to focus on. Over time, you want to focus on getting it at least 1.5. What you'll find is that you'll start off and you'll hit some good trades and you'll have a profit factor of 30. And you're like, you'll be out there like, hey, I'm the next, I can walk on water. And then you'll have some bad days that come along and that will pull it back down again. That will normalize it. But if you can keep a profit factor above 1.5 consistently, that's good. That means you're making money. So even with your commissions, more than likely you're making money in this business. Okay, so I could keep on playing around with this thing, but eventually what you want to be able to do is that after a number of trades, so we've kind of showed you guys how to build the thing based on we looked at a strategy and we said, what's our rules for entering this? We really didn't spend any time coming up with the management rules of it, but that's an exercise for the reader. We applied these rules to the spreadsheet. We built this spreadsheet from scratch, right? And so we started to fill it in. And we also showed how to apply results to come up with like top line. At the end of the day, really, this is what you care about. You care about what's here. But there's another thing that I think is really important, and this is a Brett Steenbarger thing. Don't focus. Everybody focuses on this. They want to get this as big as possible. And they want to keep this as low as possible. And that's true. That's kind of your bottom line. But all that will happen if you focus here first. If you reduce your number of errors, if you trade your plan, if you focus on success as being your ability to adhere to your plan and not this stuff up here, not how much money you're making, but if you focus on this stuff here, this is where you want to focus your time. And what you'll find is that, you'll find, and this is where the Pareto analysis comes in, you may find that after a number of trades, you have like a 3 here, a 2 here, a 10 here, a 2 here, a 1 here, or something like that. Well, obviously, we want to work on, if we put a histogram on here, we want to work on the 10 first, and then maybe the 3 after that. And then here's the 2 down here. We don't really care about this guy over here. That's just an anomaly. But this is the one that we got to get rid of. So get rid of this one in its entirety as much as possible before you start working on this one. This is how you do this. Okay. Any questions? We've been going for 1 hour and 20 minutes. I knew this one was going to be kind of long. So I do want to wrap this one up here in the next few minutes. But I will stop and take any questions before I completely and totally tear this down for today. And before the next schnauzer outburst comes along. So does that make sense? We've kind of gone through everything that we talked about. We talked about the crypto screener. We talked about how to build a short-term strategy. And that was kind of a very rough and ready version of it, but it shows you how to use fractal time frames, how to put things on your chart that are going to give you context and then signals, and how to read each one in there, and then how to build a strategy from that, and then how to build a tool to be able to manage your strategy and your performance based on that. And this is really, really, really important if you do a lot of short-term trades, which is going to be kind of the focus, I would say, of the next few months here, because I think we're going to be left with a market that's not going to give us much of anything to do except for very short-term trades. It's a very unvolatile market right now. Very quiet, slightly trending market to the downside. Any other questions, guys? Anything else? Agree or disagree? Anything else you got? Any other questions about anything else while you still got me on the line? This is your shot. Stump the doc. Go for it. Okay. Well, nothing heard. Well, if something hits you on the way home, you know, the old way homer, then please email me or reach out to me on the Discord page. I'll be happy to take your question. So, with that in mind, thanks everybody for hanging out. Let's see, I'm still not sure where to exit, partly because I can't decide on how much risk I want to take. Yeah, that is, Tig, that's by far the hardest part of this whole thing, is where to exit, because sometimes a short little exit is all that the market's going to give you, and you're kicking yourself that you just didn't take the money off the table right then and there. And then sometimes the market will give you an enormous swing. And of course, those are the ones where you took the trade too quickly off the table. The answer to that is with increased position size and splitting up your contracts so you don't really care. So you are able to take some risk off the table and pull up your stop on the remaining positions and then slowly scale out of the position. That's kind of the answer with short-term trading. That comes with time though, and most people start out that way too early. Fibonacci retracements, not really. No, I believe much more in things like just average swing length and being mechanical about your exits. I think there's way too much discretion in exits, like you're trying to determine, or people say, well, just set up your exit at the next resistance point, and you know, you'll find that it fades well below there. It is an incredibly frustrating business. It's an incredibly frustrating business in the short-term trading, right? So just when you think you got it, all of a sudden the market character shifts. And all of a sudden it's something different next week. It is a changing animal. Short-term trading will challenge your ability. Notice how at the very beginning of this, the first thing I did was set the time frames. Did you guys notice that? I set the time frames. What is the anchor chart? What is the signal chart? If markets are moving around like crazy, a 1 hour and a 12-minute chart are going to be way too fast. There's just going to be way too many signals, and you're just going to get run over. So you have to slow things down. You have to zoom out a little bit. So part of the skill there is understanding the discretion of when to change things. Okay, anything else, guys? Anything else? All right, I'm going to shift into afternoon mode. So thanks everybody for hanging out with me on today's extended trade school. I am going to be out tomorrow. I am going to be watching my potential son-in-law graduate from college tomorrow. So, so I'll be out all day. Just being a human being and not trading markets. So I look forward to interacting with you guys again, and hopefully we'll see you guys in trade school next week. All right. That's all I got for today, everybody. Thanks for hanging out with me and putting up with my little odd hotkeys. Take care. We'll see you guys soon.
Aside from my soul.